Hi everyone, welcome back to Corporate Decoder. Today we're diving into the latest annual report from Energy, a uranium mining company. This report is like a geologist's treasure map, but instead of gold we're hunting for financial insights. Will we strike it rich or will it be a dud? Let's find out. This is Energy's 10K filing, which is a yearly deep dive into their business and financials. Think of it as a school report, but for investors, showing how well the company did and what they're planning. Before we start, a quick heads up. Energy is using what are called forward-looking statements. Basically, they're making educated guesses about the future, but things could change. So keep that in mind as we dig in. Also, some of the resource estimates you're about to see may be different from how Canadian companies report their numbers. Just a bit of regulatory housekeeping. Okay, what exactly does Energy do? They're in the uranium mining business, using a method called in situ recovery, or ISR. It's like keyhole surgery for mining. Less mess and lower costs, because they don't have to dig up a ton of earth. They pump a special solution into the ground to dissolve the uranium, then pump it back up. Their main project is the Lost Creek facility in Wyoming. In 2024, they pulled out 265,746 pounds of uranium, a big jump from the previous year, but not quite what they expected. Now for the juicy details, Energy has quite a bit of uranium still in the ground. At their Lost Creek property, they have 8.5 million pounds of uranium measured and 4 million pounds of indicated. They also have an additional 6.8 million pounds in the inferred category. Over at the Shirley Basin project, they're sitting on almost 7.6 million pounds measured and 1.3 million pounds indicated. Remember, indicated and measured are more reliable than the inferred numbers. Just so we're clear, that term mineral resource doesn't automatically mean they can dig it up and sell it for a profit. It's more like a maybe, and inferred mineral resource is even less certain. So those numbers come with a big grain of salt. As for prices, they're estimating between $55 and $87 per pound for their uranium. It all hinges on market conditions and existing sales contracts, of course. Speaking of contracts, they've got deals to deliver a whole lot of uranium annually between 2025 and 2030. The Lost Creek facility is up and running, but they also have plans to bring another project, Shirley Basin, online. They expect that to start Q1 of 2026. That means they're trying to be able to extract more uranium and fulfill their sales agreements. In 2024, there was not much additional drilling at Shirley Basin, with the main efforts going towards Lost Creek, with a minor resulting additional mineral resource of 72,000 pounds. It is important to note that unlike the Lost Creek project, they have to pay royalties on those mining operations. The price of uranium is all over the place. At the end of 2023, the spot price was $91 a pound, but by the end of 2024, it had dropped to around $72. As of early April 2025, it's hovering around $64. As of early April 2025, it's hovering around $64. It's like riding a financial roller coaster. The long-term prices, however, are more stable. It's at roughly $80 per pound as of the spring of 25. It is important to note the restrictions that the US Fish and Wildlife put on companies which might limit operation potential. Looking at the past 3 years, we can see Lost Creek's production. In 2022, they captured 325 pounds. In 2023, they captured 103,746 pounds. For 2024, production seems to be rising with each year showing potential for increased uranium extraction. Let's shift to what the company sold during those years. Between 2025 to 2030, the base commitments range from 440,000 to 1,300,000 pounds U3O8 annually. Digging into the key numbers, sales were $33.7 million, more than sales in 2023, which was $17.6 million. So revenue went up, which is great. Now, the not so great part, cost of sales also increased from $19.3 million to a whopping $42.6 million. This means that for every pound of uranium they sold, it cost them more to get it out of the ground and ready for market, which led to gross loss. This affected the operating cost. Development was $41 million in 2024 versus $20 million in 2023. In total, the operating loss was approximately $63 million in 2023, $20 million for the previous year. The company was saved by its net interest income, which was good for $333 million, and by the mark-to-market on revaluation of warrant liability and inventory, which was another $6.4 million, saving the company from further losses. As you might remember from our previous section on inventory values, we see the company took a large loss on sale. They sold their uranium at a high price for $58 a pound. However, it costed them more to extract that product in that year, leading a 6.1 loss for every pound of uranium they sold. Lastly, their unrestricted cash positions increased from $68.2 million to $87.1 million. There's a tax heads up for US shareholders. Energy might be considered a passive foreign investment company, or PFIC, by the IRS. If that's the case, things get complicated tax-wise, so definitely talk to a tax advisor. One more important thing to mention: cybersecurity. Energy relies heavily on its information technology systems, and they're aware of the risks. They have measures in place to protect against cyber attacks, but there's no guarantee. They need to keep up their guard. There is an increased uncertainty to commencing and conducting production without established mineral reserves. There was an additional $100 million equity because of the sales in the common stocks, showing good trust from investors. So what does all this mean for Energy? Well, it's a bit of a mixed bag. Uranium prices are unstable, making their income hard to predict. Competition in the uranium mining industry is tough, especially with some companies having government backing. As we have seen, extracting U3O8 is also very expensive, leaving a gross loss in 2024. Salentine 24 hours are much greater than their liabilities. The total equity is also growing, indicating they are slowly becoming profitable after sales. Plus, shifts in public opinion about nuclear energy could also impact them. On the plus side, the growing demand for clean energy and the US government's support for domestic uranium production are big opportunities. But all in all, the company is doing decent, but still has quite a bit of progress it can make. That's it for today's Corporate Decoder. If you found this helpful, give us a thumbs up, drop a comment and subscribe for more.